Two of our favorite three stocks have just come out with their earnings reports, and on the surface, it looks pretty good. $70 billion in stock buybacks, a new dividend, and Microsoft's earnings going gangbusters. But what could this do to the environment within the options market? As we know, if we move into a positive gamma situation, we could be on the way up. Well, today we talk about the dark pool activity, the CTAs, and of course those levels, and what you need to be looking at throughout stocks, commodities, and cryptos. That and Google's big gap, Meta finding a buyer, and Tesla coming into the most traded zone for the bulls to regain control is just the tip of the iceberg. What's really happening with yield spiking over 5% over the last 24 hours shows us a big story for something very interesting. Well, welcome back everyone to The Daily Show. My name is Tom, and as always, we're covering the latest macro data, lead indicators, and the hottest charts, and why they matter to you as investors and traders out there. If you haven't already subscribed to the channel, consider doing so and hit that bell as we go through this every day, and it helps you all better understand how these markets move and work. I've had some great feedback recently for some amazing stories out there, so keep them coming. It's been really, really fantastic. Let's talk dividends and, of course, talk the overall earnings reports. Then we'll go into the charts and, of course, the lead data. But the div sounds great on the surface until you realize that Google is only offering 20 cents per share. Yeah, that's almost not worth filling in the paperwork for. But anyway, that's the big thing there. But I think it's really about a couple of other things. $70 billion in stock buybacks continues the overall Ponzi in big tech, with most of them now doing this. And of course, the dividend, even though it's a token, will end up being a big story for Amazon as well. That's giving its earnings reports very, very soon. When we go through the earnings call, though, we see everything that we expect. Remember, recently we talked about how Google was 22 to 23% undervalued to the rest of the big Mag 7 stocks. Well, that's starting to reprice itself. And they were on the fledgling bandwagon of AI. Have a look at this. AI, 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 AI. You know, it doesn't stop. But on the surface, it looks pretty good. You've got an increase in, of course, YouTube revenue, 21% year on year. And Google's cloud was growing 28% with significant GCP growth. So the other thing was that, of course, Google is going to start using AI-powered search, which is good. They've already been doing this a bit. But I think the big story here is, remember, Google have not only the number one search, but they've also got YouTube and, of course, cloud technology. If they're able to implement the technology in there, they already have the data. And as you may know, if you've been watching the channel for a while, my two main investment philosophies of this next decade are data and, of course, geopolitical tensions. And that means that there are certain sectors and certain areas of the market that are probably going to outperform. Most of you know AI, but the geopolitical tension has only really just begun in terms of the way people are trading it. It happened about 2-3 months ago in terms of the underlying market. Now everyone's on board, but there probably is more to come. Let's talk about sentiment surveys. So it's amazing how fast things can change. Everyone went from super bullish to overall a little bit more bearish. And then, of course, everyone's now confused with the neutral reading. And this brings us to around this point in terms of the overall bull/bear spread. Back to zero. This is usually an area where you hit around the 20-week moving average. So it's very normal during a normal correction to get around here. And if you're going to hit a 50-week moving average, which is the next most important zone, you're generally going to tip into around the negative 20% spread. That's what happened back last year, and that's usually what does end up happening in these particular sentiment reports. Now, I apologize for the blurry thing here. You're not losing your eye vision, but overall, this is just kind of a bit of an example why I think there's a bit of strength in the markets. Retail sentiment probably dropped off a bit more than you think. With Nvidia dropping 10% in one day, that caused a lot of people to get liquidated. And you can see it here with retail participation in single stocks dropping off a cliff over the last couple of weeks. When we think of JP Morgan and some of the readings they get, they've got a thing called Z-score. And technically, when it's under negative 1.5, that tends to be a pretty good time to buy as a positional into markets. And that's what we saw a few days ago. Of course, we find ourselves at 5,100, and we came back to that massive put wall sitting at 50.25 and 5,000 over the last 24 hours and instantly found buyers. And then, of course, had a great earnings result from Microsoft and Google. Is this normal? Yes, this is exactly how it usually plays out. And again, the 20 and the 50 really holding up those hopes for the bulls and, of course, dashing them for the bears. Let's look underneath the hood, though. Are the bears actually getting in more control or less? Well, the answer is probably less, with the advanced decline line rating being one of the most important things to take us out of a pullback It hasn't happened yet. If we gave an update today, it'd be like this. And you'll notice that overall, this is a good read of getting out and getting new all-time highs. So again, something we'll be tracking over the next coming weeks. Also, the S&P 500 10-week average being above the 40-week average. It continues its overall run so far. And again, is it unusual? Not really. We sometimes go into epic runs of this during those big bull cycles. So again, follow the price action more than anything else. But I think the most interesting thing for the bulls has to be the Zweig breadth thrust. This is a very strong read for markets in terms of getting them through. It hasn't done just yet, and you'll notice there's a little rollover towards the downside. If we do end up getting that Zweig breadth thrust, though, that will be a great sign for bulls over the next 3, 6, and 12 months. So something to keep an eye on. Also, percentage of S&P 500 stocks above their 200-day and above the 50-day starting to edge out the negativity in markets, poking its little green head out of here. And you'll notice that that is something that doesn't always happen unless things are starting to really improve. So yeah, a huge change here from that massive sell-off, the really big flash across the board to suddenly a little bit of recovery. Consumer financial stress as well falls to its lowest in a year. Now you might think, well, how the hell is that possible considering rates? I don't know, but it is there. And that's something that's coming through here. So you'll notice that it doesn't look like the stress in the financials is as much as you might think. Now, that's not to say certain markets aren't stressed. Of course, the commercial market's incredibly stressed, though that only hits some people. And some regional banks, such as some in New York right now, are looking like they're going to fall over. But at the same time, they're small in comparison to the big players. You'll see here that the US GDP was, of course, weaker. Is it enough to be worried about yet? I would say no, but core PCE is coming out in less than 24 hours. So, of course, that's something you'll want to be looking at. And is now the time to make a change in terms of the markets? We've been discussing this recently. Of course, we've seen the geopolitical tensions rising up, the UK 100, the Aussie 200 also starting to outperform the US markets thanks to its real focus on energy, minerals and miners, and financials, actually. But also the German 40 as well, the DAX starting to do better, and of course the HSI. So it looks like there's a little bit of worldwide kind of action going on. And if you actually do a lot of overlays, you'll notice that a lot of those markets have improved and been doing better than S&P. So it's always the US that leads, and then we go into other markets as we broaden the overall base. But I do have a couple of ideas about some nice areas inside of the S&P 500 that we'll be talking about very soon. So make sure to subscribe for that. Now, this is one of the stories we've talked about, which is, of course, clean energy metals. Some of these are definitely not clean. I mean, the cobalt is a disgrace. But anyway, that's a story for another day. Of course, we look towards copper and nickel. And you'll notice some countries absolutely dominate this. In particular, the copper, Chile, this is a big one, and Peru. So these are areas that, pretty much copper is the number one player here over the next 12 months to multiple years. It's going to be needed no matter what we're really doing. And that's one of the ones that seems to come out of those countries. Now, if you notice who's processing them, there's one country that reigns supreme there. So again, with geopolitical tensions, that could get a bit fierce, and you can see how spikes in those particular metals and minerals could become a real thing over the next coming years. 2024 earnings sentiment percentages. Overall, we're seeing the world actually starting to get a little bit of an upgrade. Emerging markets actually dropping down to those low points. So if this starts to tick up, that'd be good. But I think with emerging markets, you're going to have to be very focused in on the correct areas. And it's very difficult to invest in those if you don't know what you're doing. But there are no doubt opportunities there. Also, what about the spreads at the moment between treasury notes and other things? Are they showing bulls are in control? In general, yes. And we'll demonstrate today that what the bonds market is really telling us about this correction so far, and whether you need to be terrified or actually a little bit more on the other side. Let's talk rotations. Now, one of the big things that we've seen come up here is KRE. Now, you would think on the surface, if we were meant to be terrified, how are regional banks up 5.12%? Well, it's quite simple. If you get a lot of interest rate increasing, which it has been recently, that's a great thing for the balance sheet. And what I expect banks to do is, even if we don't get cuts very soon, what they're going to do is they're going to lower their overall home loan spreads as they compete with each other. I'm not exactly sure how many banks and financial institutions overall there are in the US, but there's a lot more than in some other countries. It might be 1,000 or something. There's a lot. I'm sure there's a lot. XLU also doing very well. Now, this could be a bit of a sleeper hit. I love utilities during certain times, but I think utilities could be starting to outperform the S&P thanks in part to AI. Energy, use of ChatGPT and other likes is going to be big. So this could be a storyline for the horizon, and also a mixture of defensives and a couple of other things doing well. But when we go over to the last 24 hours, it was really about gold and semis and minerals and metals. Pretty much everything we've liked recently and we continue to like. Energy also coming through here. So yeah, a pretty good day for gold stocks. Gold stocks still playing catch up to gold spot. When we go to the S&P 500, who won the session? Well, I would say it was the bulls. I mean, they obviously were losing in the start of the session. It came down to that 5,000, 50-25 zone where we knew all the puts were for the session, and it bounced off there, not going into negative gamma territory, which was very important, not holding down that negative gamma territory, and then bouncing back up. Now, because of the sequence we have right now, you would have to say the bulls kind of control this smaller time frame, even though it may not look like it on the surface. And that's because the weekly 20's been hit, which we know is a big deal. We've come back down and we've tested a few things. And now it'll be whether we can get through the call wall. So we know that we've got a VWAP sitting here, volume weighted average. And then, of course, we've got a positive gamma level at 5,100 as well. So yeah, the market is actually trying to get through this zone. If it does, we could push all the way up into this HVL level around 5,200. And that's going to be around the last level that I think the bears can take control of this market. So it's either right here, right now that the bears are going to control. You'd need some type of catalyst for that, maybe call PCE, or they push through and we move back into a positive gamma situation for now and probably start to squeeze another 75 to 100 points out of this market. And it's easy to see why when you go to a higher time frame, how this is so important. So we talk about this being a general bull demand zone. One of the reasons why is because every time you've hit the 20 generally, you tend to get buyers. We've already mentioned this several times, and we talk about it from a positional, some dollar cost averages as well. The question will be whether it actually fails around here. Because, of course, if it moves underneath the 20, we move towards the 50, which ended up being around this point, and it'll be around 4,700-ish, I think, if we get through. So, again, bears, you're just hoping for a close weekly under here or even daily, and then you get that nice move down, and that would mark out a full 10% plus correction, which would be about what you expect. Let's have a look now at the options. So why do I keep going on about the options? Because 5,100 is this well-struck level. Take a look at how many options are starting to appear for the end of the week on the 29th. So we've got the 26th here being a big deal. And actually, sorry, that's the Monday session. And the Monday session is getting 5,100 as a huge amount of calls. And if we go through, a lot of these are going to start needing to be hedged off. So if price action starts pushing through, we're going to see futures buying, and that pushes that narrative that we've seen for a lot of 2024. Now, the puts, they've kind of disappeared in recent days in terms of comparison to the calls. So, of course, if the market falls through, we're still a negative gamma overall. So if the market does end up falling through, then there's a lot of potential waterfall style components. I think we're going to need to make it below 5,000 with the close to get there. What about the CTAs? Do they like the 20 weekly moving average? Yes, they do. It seems like they're purchasing a little bit. Obviously, that shows some signs of life. Depending on how you look at it, they always buy the 20. I mean, you can see they spiked it last time a little bit as well, and they tend to also love buying that 50 as well. So the 50 and the 20 are their main purchases. You can see here that the systematic funds are doing the same thing on the NASDAQ. So same thing overall. And gold actually getting dropped a little bit here, but remaining relatively strong. So I'm interested to know whether this is an undercurrent change, because the price action small time frames actually looks a little bit more bullish than bearish from gold. So maybe it's a little early to tell there. I put this chart in the previous video because I thought it was interesting and very important to have a look at real estate agents and brokers, and just generally the amount of people employed by the real estate industry. As you would be aware, it's a very important industry in terms of economic booms, and this is showing you there is a massive boom underway, but also to be very concerned in the future, because when we get the booms like this, it usually means that there's a lot of political pressure to make it keep kind of going, and that leads into some very questionable things. When we talk about look at the election years, do we expect 5, 6, 10% pullbacks? Yeah, on average, it's about 9.95 is possible, something like that. Now, we could also get that coming into the election component. So there's usually two weakness points. You get a weakness around here, and then you get sometimes a weakness in that September leading into the November elections. Those are the two ones that you generally get these little corrections in. And you'll notice here the chart kind of demonstrates that, especially when you have that incredible strength. When we've had big Q1s, then we tend to kind of do sidewaysing, maybe not even super improvement, although I don't know, this market's pretty strong, so it may just improve. And then we sometimes see that kind of secondary September dip. So that's the general rule of thumb. If we have a look even further into the data, you'll notice there's a lot of wishy-washiness here, but still overall coming out bullish by the end of the year. And this is the two big stats, of course, 12 and 76, showing that we're about here at this time of the recording, showing that we generally have kind of like sidewaysy markets, maybe even recovery markets, but overall very, very strong. And then weakness again, as you'll notice in a lot of these ones, that comes through that September into November section. So yeah, that's usually the way the market plays out. Obviously, price action is going to become the most important. So we've seen Microsoft, my favorite stock, of course, in the markets, although I've been loving Google recently, which I've talked about. And then, of course, we've seen Google as well, many others coming through. Generally speaking, a pretty bullish tinge to the AI stocks. This is all about Mag 7. As you know, that makes up most of it. The market doesn't have huge expectations for the other stocks. So next week, we kick off with even more. We're starting to get a general rule of some of the good stocks are doing it. As long as we get maybe a nice result out of Amazon as well, or maybe even Apple, we'll see. That could really buffer the bulls' perspective. If they come in bad, it's still a little bit wishy-washy, but as you can see, 5100 is very important. Also, the VIX. Let's get into the charts now. So we talked about being above 15 and 16 being critical for the bears to hold. Notice that we're finding 15 right as we find that 5100 level. So effectively, yeah, it's make or break for the bulls and the bears at this point. Also, when we take a look at the bonds, the overall bonds options yields, they're coming down. So that kind of shows you that the fear in the market that was there when we talked about it last week, when we talked about that, or 2 weeks ago, when we talked about that spike in fear, that's now dissipated quite a lot as we're down these levels. Again, that's good for the bulls. Also, when we look at bonds in general, they're not freaking out when we consider interest rates components gone through. So really, it's kind of like just sitting around in the middle of nowhere land. Central bank liquidity, dark pool activity. We'll go through the dark pools in a moment, but central bank activity is, of course, overall weakening here. You'll notice that they're kind of taking some liquidity out of the markets. It is normal for it to happen around this point in April, though. So we'll see whether it upticks in the next couple of weeks. If it does, then I think it's all stations are still good in terms of central bank liquidity, but it is something that we must watch because if it keeps dropping, that is a concern for the bulls. What about gold versus treasuries? Well, gold is improving, and we've loved gold recently. Now, I liken this to basically debt. So what gold's doing is it's improving as the debt of the US starts to increase and increase and increase. And you'll see this is not a new trend. Gold's actually been doing pretty well for a while versus debt, but it particularly did well during one of these late cycles last time. Then it had kind of a lost decade, which is this period, which is basically a period of horrendous performance. Gold was horrible, and it's accelerated over the last couple of years, strengthening, of course, my case that I think that gold's going to 3K. Now, I actually think it could do more than this, if you can believe it. I'm thinking 4K even is possible. But you might say that's delusional fantasy, so we'll see what happens. One thing's for sure is gold has accelerated. My main guess here is countries are stacking gold to create a strengthening BRICS. And in particular, if you're not familiar with BRICS versus SWIFT, you should really look that up. But gold in general is, I think, here to stay as a player over the next couple of years. Even if you think it's worthless or whatever you might think, it is being bought by central banks. And ultimately, that's a very strong pick, along with some of the other things. Also, there's a question whether we're in stagflation, which we'll answer on the weekend. And some signs, again, showing that stagflation might be here. Let's move over to gold in general. Just looking at the price action, small time frames look pretty good. We talked about this being a bull zone over the last 24 hours. And it did find buyers. It also bounced up here. So this is, short time frame, kind of bullish, looking okay. Of course, if we end up taking this most traded zone, you have to wait for more or be bearish for a little while. So for now, I think the bulls are in control, trying to push that kind of 23, 70, 80 narrative out of the ounce. So we'll see whether they can do that. Dollar index also weakening, which helps the overall gold kind of trade. You'll notice here it could be a flag to break up. I don't really have too many opinions on dollar. As we said, we're at the resistance or the supply zone. We break to a new high, then we can go on the momentum train wagon. But for now, it's just kind of moving around. Now, copper, wow, it just keeps getting bigger and better and better and better. I'm a huge fan of copper moving forward. I didn't expect it to continue to rally so much. Obviously, the trend's up, but it's just 2 steps forward, 1 step back a little bit here. It's got a lot of, exhaustion signs on it, but it doesn't seem to care. That's fine. You follow the trend. Copper is still up for now, and we might be moving a little bit more further up to that next resistance we've spoken about in other videos. US oil kind of breaks past that supply, showing that maybe the worst is over for oil for now. I don't really think it's a strong trade, but if you were looking at it, you'd probably be looking around 82 a barrel, which seems to be a relatively well-defended zone. The best zone for oil moving up is about 78, so a nice retracement to 78. But we go to a higher time frame, and you'll get an idea that there's a lot of wicks here, and those wicks hold orders. So someone is buying oil at these prices. Let's move over to Tesla. Now, that's a strong, strong move, guys. Woo! Look at that weekly. Wow. We reported that this might be a catalyst to put a bottom in Tesla. Now, you might say, well, it's just words. It isn't really bringing through the goods. I don't think it matters in the weird monkey world that we work in here in terms of what's going on in the markets, or some people call it the clown world. Really, if you say AI enough times, that really strengthens a stock. Of course, Tesla's down 40% year to date, now probably about 30% year to date. So it's down a lot. It's mentioned AI many times. That's taken us to the previously most traded zone, which is obviously where bears can sit. You can see I've got a green line here. I've got a little bit of resistance here. Like, don't get me wrong. I think Tesla could find problems at this point, but that's a strong pickup. And what that's pointing towards is that if we get pullbacks, they're probably going to be met by buy demand. So, something like 150 base, which just so happens to be where a lot of options are. If you'd like me to go through the options for Tesla, let me know, comments down below, where there's a lot of options sitting. This kind of, is a strong base. This is technically an island reversal as well. So it's a very overall good sign. Volumes, of course, were up. The winner of the volume ultimately is the bulls, it looks like. So I expect some resistance here. If we do end up snapping off and going all the way to 185, I think it's really sustaining that idea that, okay, we're in a new upward trend, and that is probably the low of Tesla. Temporary low for now. AAPL, what's going on here? It's taken back the 168 level in anticipation of earnings coming out very, very soon. So this is, again, very interesting chart. Earnings will be important for Apple because it's been so negative. That gets above the most traded zone of 178. Well, sentiment's back in. Again, the bulls are fully in control of the market at that point. Bears must bust a stock like this back down to get that sentiment negative. Semiconductors versus SPY, the 20 moving average holds up. That first entry position, very strong there. You can see SMCI coming off some 61.8 pullbacks as well. So this is a favorite of many. This is obviously down quite a lot in terms of overall percentages. Same thing with NVIDIA. We reported that this is where the bulls were going to buy if they were going to buy, and they smashed it. So they went boom. Now, they'll have to, of course, contend with 848, 849. You get through that, you're starting to look at a recovery in one of the favorite stocks. Is it still possible to get the 680, 700? Yeah, but it's going to take a bad catalyst. So you're going to need a bad catalyst. And as I've reported a couple of times, I don't really expect it to be under here. I feel like, this is possible. This is obviously still possible as well. They're both very good for the overall investor. Traders as well would have liked that 61.8 over the last 24 hours. It was hard, though, because, of course, the market looked nasty in the morning. You anticipate the earnings. There's a bit of a gamble there because, of course, if both earnings come out poorly, being Google and Microsoft, then it takes you underneath. But that's why you've got to take the emotion out of it. I said this to our private community, our private masters club. I said, look, if you're looking at this is a over 60% style trade. If you're looking at the metrics, and you just got to say, okay, well, you get to choose as a trader in particular what your risk is. If you risk $100 or $1,000, that's all you really can lose if you put your stop losses in. You know where those need to be. So you really need to take the emotion out of it. Remember, if something feels really bad, but it's statistically likely to happen, it's probably better. And that's a bit of a rule that I've seen a lot of times play out. What about the Aussie 200? 2 weeks off this area of about 75.24 shows that there are buyers in the Aussie 200, similar for the UK markets. As we mentioned, we are, actually it's even better at the time of this recording. Wow. So the Chinese market doing really well. HSI, something we've been focusing on for 2 months now. 700 being 10 cent. I've put them side by side so you can see it. We're aiming for 18K. Momentum is on in these markets. And the one thing about Chinese markets is when they turn from being so negative and everyone hates them into being, oh, wow, we're actually seeing the beginning of a different trend, you'll notice they go wild. There's nothing like the Asian markets for getting some wild action on them. In particular, they just love the wild action. Look at this one here from 16 into 18, and there's plenty of stories like that. Now, they often bust up, and don't get me wrong, the forward PE on some of the companies, if they do go wild, ends up being in like the 500s and hundreds and even thousands, like Japan in the late 80s. I'll talk about that soon. Did you know that Japan once had 100-year loans on its property? Yeah, if you didn't know that, that's a very interesting stat. And that was back in the 80s. So imagine if we did that again. German 40, you'll notice here again, the bottoming of the market and overall some nice strength coming through. And it kind of points towards, further strength on something like the DAX. That's a decent pullback coming back into that most traded zone, sitting around 17,800 and finding some buyers. On the price action side, you can see why some bulls are getting a little bit more excited. US 200 or 2000, that came into exactly where we thought there'd be buyers, the 1950 zone. Not quite 50, got a 54 point something. But yeah, again, very strong. Does look a lot better. Needs a new high. Ultimately, the S&P 500 positive gamma switch will be key for that. NASDAQ, yes, it's right at resistance, which is exactly the same as we expect on the SPX. And just on the SPX, just remember, the reason we get so big on this 5100 level is because we know there are 3 giant dark pool transactions sitting there as well. Now, remember, a big investor or a big trader, they're not going to just buy with a stop loss. They buy as positions. So if the market comes down, and even though it keeps going down and they keep buying this level, it could be sells. But if the market ultimately moves above that level and you don't see more transactions, what that's telling you is they were buys. And of course, if they were buys and some of the biggest players were purchasing there, you start to move into the positive gamma environment, it strengthens the bull case. So for bears, it's a critical point to now sell off. And of course, some people will look at this candle formation here and they'll say, I know the bears are in control. I would say it's up to really the options market and how they want to trade it. Where is the money to be made? And based on retail traders getting slipped heavy last week, that's of course strengthened that 20 weekly moving average. It's just how it kind of is. Let's move over to Bitcoin now. Long leg doji means it doesn't know what it wants to do. Of course, it's maybe getting lead from the broader markets. You'll notice here that bear level we talked about has held for now, a strengthening above 67 plus. That's going to be very strong for Bitcoin. I'd still love to see a 30% sell-off. I'd still love to see a weekly 50 moving average. I just think that's healthier for the market. But a lot of you out there will be saying, Tom, please, dude, I don't want to lose that much money. Fair enough. So if we don't get that, that'll be okay as well. You just got to follow the overall price action. So on the surface of it, really small time frame here. The bulls are in control of the really small time frame, trying to get it back up. The bears are maybe, I would say neutral actually, because this is really the bear level. You could argue that this little pinpoint here, which is around 65,600, would be worth watching on the charts. And then we'll have to find out what happens from that point. Good luck out there, guys. It's going to be a very tough one. Core PCE coming through. Of course, the GDP sucked, but ultimately the GDP is known by the algorithms before it comes out. Bank of Japan, all of these types of things. But really core PCE, the focus here of the next 24 hours. And then earnings kicking off next week. So remember to subscribe. Smash that alert button. We are going through so much. It's going to be an incredible time, I think, for day traders. And of course, if you're interested, check out some of the other things that we offer, including our socials. Follow us on X, etc. Thanks so much, everyone. Have a great day. We'll see you in the next video. Bye for now.